Hey, good afternoon, everybody. Welcome to 12-Minute Trading. My name is Doc Severson. I have got Dave Lukas with me here today. Today's Monday, the 26th of June, as we approach the end of the second quarter. Here we go again. The price has been a little bit weak over the past few days or so, which makes sense, totally makes sense. As fast as we went up, we are starting to slowly retrace a little bit. So, Dave, what are you seeing in the markets these days?
Doc, a long time ago, and I might have heard this from you, but I've heard it from all the places, and I know you have too. When I first started out, somebody said to me, markets will run as far as they can in one direction and turn and run as far as they can in the other. And at the time, I was like, well, okay, it seems like a kind of a duh comment or whatever, but you don't really understand it until you're in the thick of it and you get like what we've just seen, right? So we had this massive run up that just seemed to go on, have no end. And, it just, everybody starts to pile in. We get into euphoria. If you followed us or if you've listened to us over the last month, we've been talking about being in the euphoria stage and going parabolic, and that's what you get. And then all of a sudden you turn and run as far as you can in the other way. And over the last 2 weeks, we've been talking about how this market was out of energy. It was due for a pullback. And the higher it goes, the more parabolic goes, the more violent that pullback will be, right? And so far we've come down, 2% to 3%. But if you look historically at a lot of these indexes and stuff of what they do, like the NDX from a move like it just had typically comes down 1,000 points or more, right? So we're just in the beginning of that. The SPX 200 points or more as a, pullback from these things. And the nice thing is like, it's actually healthy to do that, right? That's what sustains a move. You pull back, 5-7% correction off of a 10% move, and then that puts in that higher low, you printed the higher high, and then you go to the next one again, right? So when you're in the thick of it, it feels crazy, right? Because one day it's like never ending, and then all of a sudden it's going the other way, and it's relentless to the other side. So it really puts in perspective that markets really they'll run as far as they can in one direction, run as far as they can in the other, and right now we're starting to run as far as we can in the other. End of the quarter makes a lot of sense, right? We've got a lot of things going on out there, right? Russia almost had a coup over the weekend. It was like, what was it, shorter than Grenada? But it was like the less than 24-hour coup attempt, and all of a sudden that was over. But markets hate uncertainty. Any little bit of stuff comes in. Think about it. We're going to the last week of the quarter. Investment houses, traders, we're also getting ready for the 4th of July holiday. July is typically a low volume month. All the traders are at the Hamptons and everything else and away for their holidays and all that stuff. Why not take some profits off the table, right? So to go down this week it makes perfect logical sense to me. Lock in those gains. See you later for the 4th of July in the Hamptons, and, just enjoy the spoils of what you've done over the last quarter. So I think that's kind of where we are.
It's interesting because I'm always, I'm a big character guy, right? I'm always trying to read the tea leaves in terms of what is the price trying to tell us? Because it's out there every single day, and it's up to us to interpret what the price is trying to tell us. And different people will read different things into it based on what their bias is. The human mind will see whatever it wants to see. There was just like why you have two people in an auto accident will have a different story in terms of what happened. It's just that cognitive bias that we have. But what I am seeing right now, that over the past week or so since the reversal the previous Friday, is that this is a very gentle pullback so far. Again, like you said,
so far
it's only 2.2%, 2.5%, something like that. And it's only gotten down to about the 23.6 retracement on the S&P. So for now, what I'm looking at, and I'm going to bring up the chart here, what I'm looking at is we've got what I consider to be the first level of support, which is 4,300. So this is a minor level of support, I will say. And that's below the 23.6, and it's an important level of support, and it was an important level to break out because what happened was we consolidated there for several days before it built up enough power and enough energy to be able to break out above this thing. So now a retest of a breakout is very, very common. if we do not hold that level. So the way it would work is if we come down to here, we bounce off of here to a lower high, and then we dumpster dive down below 4,300, then we're heading for 4,200, and that actually turns out to be the 38.2 retracement of the entire swing from the bottom here. Okay, so we'll see what happens now. 4,200 has to hold. If it does not hold, then we could be heading a little bit lower into the second half of this year. So we'll see what happens. For now, my sense is that once we broke above 4,200, we shifted into a different character market. We truly did leave the bear behind, in my mind, but I'm willing to be wrong. I'm willing to change my mind, and that's how you have to handle these markets, is that you can take an opinion on something, but you have to know what your plan B is. So my plan B is that if 4,200 is gone, I'm going to have to shift gears again. But for right now, I think this is all extremely normal. Look what happens to the daily chart. It's building back up again. The price is doing exactly what it needs to do to recharge itself, to restore itself in the same manner that you don't simply summit a mountain in one day. You're going to go as far as you can and then rest for a little while. That's what's happening in the market right now. Well, look at the weekly chart. Yeah. This means that we're going to be in this pattern for probably
for a while.
The dog days of summer, and that's why I put that thumbnail out there. We may be chunking around for a few weeks here before this thing is ready to move again.
Well, to your point, Doc, as you've got that up, I think I don't know if I think we see 4,300 this week. I think we'll get a test of 4,300 by Friday. We've got Powell talking twice this week. We've got a number of other Fed governors. They seem to be staying hawkish. But we also have like GDP coming out Thursday and a few things. And it's going to be all algos at the end of the week trading. A lot of these guys are going to be left, and it's going to be skeleton crews at the brokerage houses and stuff. And really these big brokerage houses are what really move the markets, right? So I think it becomes low volume towards the end of the week. I think we probably test that 4,300. Maybe bounce off of it. I think next week's when we see more after the holiday and stuff is where we maybe see that lower move below 4,300. If we're going to get that and stuff, I just think that it's going to be a volatile week towards the end of the week for those reasons. So expect some decent movement. I think today's been kind of an interesting day. We really started off. We went up pretty decent, then we gave it all back and went down to some lows. Now we're coming back some. We're kind of staying almost in the middle of the range, and we may get a day or two of that before things really break. But I would see 4,300 getting tested at some point, in the next couple of days.
See, I have a slightly different read on that. So to me, Powell, the fact that Powell is talking this Wednesday does not mean that much to me, because what is he going to say that's any different from what he's been talking about for weeks? We've had over a year and a half of Powell's banging on the drum saying, give me more rates hikes, I need more. And he just recently said that he wants 2 more, and the market's calling his bluff, saying basically you get 1 more and that's it for the rest of the year. So that is not going to get resolved by this Wednesday. So Powell's just going to come out. I don't know who he's talking to this Wednesday.
He's overseas. So it's not going to be anything. It's going to be something the algos take and make a big move off of. That's what's going to, if anything, that's what it'll be. It's just, again, a low volume week with a lot of traders out and a lot of the, left up to the machines.
There's only going to
be those kind of moves.
But there's only going to, something just got filled by somebody. That's always a good sign to hear.
Yeah,
I think we're only going to have a big move based on his comments if there is something new in his comments, and I don't believe that he's going to put anything new into his comments. The place where he does put something new into his comments is typically Jackson Hole, and that is going to be the end of August. So we got quite a ways to go on that. The other thing that I would say is that GDP, this is the third read on first quarter GDP. Nobody cares about it this time because we're already tracking towards a 2% GDP on second quarter right now, and that's what the market's focused on. On the Atlanta Fed has been tracking that. So that that's coming out okay. And again, looks like we've been ducking and weaving and bobbing this predicted recession. The other thing is that end of quarter, a lot of times we will see a little bit of window dressing into the end of the quarter.
Yeah.
So
you can see it rush up a little bit. Yep.
So here's where you and I agree is that if we do, maybe we do hit 4,300 or something like that, we may end up bouncing into the end of the week.
Yep.
And then here is where the rug pull comes if we do something like this. I'm not showing the chart here. So if we see a test of 4,300, would be reasonable this week. But if we see a bounce back up into the end of the week on window dressing, this could set up that lower high and set up the rug pull for maybe next week or, who knows? I mean, it's
into July sometime.
But I totally agree that we're going to have next to no volume on Friday because people are going to treat this like a 4-day weekend, right? Monday, we have a half day of trading. It shuts down at 1:00 on Monday. And nobody is going to be around. It is going to be. I'm not even sure if I'm going to bother doing a 0 DTE trade for that day because it's just going to be so lame. But just no volume for that. We'll probably have like an expected move of 10 points for the day. It's just not going to be worth trading. But
it's not. I don't think we're going to see it this week. I think if we get down to 4,300, that's going to get bought back up. Everybody's going to say, okay, we hit that mark. We hit 4,300 and we bounced off that. They're going to probably, push it up through the end of the week. And then it's in the next few weeks. And the reason being is because of the weekly chart. That daily chart's going to be charged up probably sometime next week. That weekly chart is still super exhausted on the floor. Yep. And the easiest way to charge that weekly chart up is if you walk sideways, it's going to take the whole summer to charge that darn thing back up. The fastest way to charge it up is a good drop down. And I just think that after the quarter's done, it's a great thing to see happen that these guys sell out of those positions, run it down, and then they buy it back once it's down there and run it back up again, So that's just, I could easily see that happening.
Yeah, I think so. Let's take a quick look at the NASDAQ while you're here. Because you watch this thing a lot more. Right, you watch the NASDAQ a lot more than I do. Look at this. We have not even seen, if we take this last swing here, we have not even seen a 23.6 retracement on the NASDAQ.
No.
But look how fast this is charging up. So this is like Junior in the back seat of the car on a family vacation, and we're going to see this thing bounce, and it's going to be a sucker's rally if we bounce back up to 15,000 on the NASDAQ because it's not done yet. Mama up in the front seat is still tired, right? And so we'll probably
that weekly chart's going to pan out. And you can look back if you zoom out on like the weekly chart, every time we've been in this position where we've had these big run-ups and we've had exhaustion, we pull back 1,000, 1,200 points. So maybe we don't get that much. Maybe we get 500, 600, 700, 800 out of this, but still, we're nowhere near what typically needs to be done to get this thing going again. Yeah,
14,000 seems to be really realistic for this, and it may happen off of an attempted rally. People say, "Here we go again," and it's going to be a lower. It's going to be a lower high. The trap door is going to open up, and it's going to be a bull trap, and this is how things move. So, but I think this will be actually really good for everything, for it to come down to 14,000 or something like that. Maybe do a little shake and bake down at 14,000, and then we're going to be set up for a wonderful third quarter. You never know.
Well, and I think one other thing too is, every statistic and history around the markets, when you've done 13, 15%, the NASDAQ's up 28% in the first half of the year, you end the year positive. Now, usually the back half of the year, in a few cases, it's been bigger than the front half of the year, but most of the time it's like, if you're looking at the S&P, it's doesn't gain as much as it did in the first half. It's like a fast start, it got a fast start and then it kind of coasts into the end of the year, but you could see another 6 to 8%, I think, is like the average you would see on the S&P after having this move through the end of the year and finishing. NASDAQ maybe another 8 to 10%, right? So I think I think it'll be a great back half of the year for our iron condor trading and stuff that we do. I think that's it's gonna slow down a little bit. You're gonna have some moves. You're gonna have these pullbacks followed by some decent upswings, but I don't think you're gonna see much. I doubt you're gonna see another move like what we just saw through to now. Yep. I think those are once a year type things.
And I agree with you. I think we may be seeing some chop quite a bit through this summer and so forth. But as we've seen, the price has been going lower, but the VIX has been basically still on the ground. It's just not moving. So this is why we're going to be making a move, I think, before too long here into trades that handle low volatility a little bit better, which is either debit spreads. You could be doing debit spreads is no trouble on something like that. It's a different philosophy. Or we can go into what's called a time spread as well, too, which are, without getting too nerdy here, they're long vega, which they look for a rise in implied volatility after you enter.
Yeah.
So,
yeah. And there'll be a time where that VIX spikes. We see those. It doesn't mean it won't revert back to where it's at now afterwards. But we're gonna get some times where you're gonna get some decent volatility come back in. It's gonna be something that comes out of nowhere, like a Russian coup over the weekend, or something like that actually follows through, that is not priced in, right? That's the big thing. Anything that's not priced in, any real uncertainty comes back in, that's where the market's going to get really jittery. I think, we'll see what the GDP is for, the second quarter and all that stuff. I think at this point, it's hard to say you're going to be in a recession this year because if they actually follow the rules, it's 2 negative quarters. So if anything, you're not going to see a recession until the 2024 at this point, if there's going to be one, right? And so I just think that there's whatever it is, if we really get back to that volatile environment, it's gonna have to be something that just comes out of left field. Not necessarily like a black swan, but like something that just is not priced in that, can at least affect the markets for a decent amount of time.
Now, if you look at the history though, the nature of those kind of things happening where you get kind of this one and done reaction, which comes in out of left field, is almost universally within a week or two after that, you have higher prices. So you will drop.
It's got to last for a little while.
You will drop like an elevator for several days, and then all of a sudden you end up slingshotting as certainty comes back into the market. People wrap their heads around whatever change just got made, and all of a sudden they go, whoa, hey, we're still alive. Let's go for it,
Yep.
If you're not long, you're wrong.
And we've seen that, like, remember SocGen and things like that, where we get those moves like that. And,
SocGen.
Volatility spikes. It's a great time to sell, though. You get that big drop. Volatility goes through the roof. Great time to sell. It's like one of those few times a year that you get to sell the best premium, and you got to take advantage of that stuff.
Brexit was like one of the best examples of that. The election in 2016 happened like that. I mean, there's all these examples where it's like, you drop like an elevator for a period of time, and maybe we even get, futures limit down at some point.
Yeah.
We drop 7% overnight, those kind of things where it just, scares the hell out of people. But ultimately it ends up, as a buying opportunity, because that is the type of liquidity that firms will kill for. They want those, like, blood in the streets kind of liquidity where they can just go all in with a huge position, and it will not move the market because there's such a pool of sellers down there.
It is also a good sign that we move back into a bull too, when we see that type of action and behavior like that. So, yep. So cool.
Well, we actually got a fair amount of people online here. So I realize that most of you are going to be watching this on a replay, and we love to interact with folks. But if any of you are live here today and joining us, let us know if there's anything you want us to address while we're still here.
Yeah,
Otherwise, if
anything
you're
on your
watching,
minds, guys? Any questions we can answer? It doesn't have to be necessarily about what we're talking about here. We try to keep abreast on all the macro and different world events and things like that too around here. So if you got something that's on your mind, ask it. We're happy to answer it. This will be we won't be doing one, I would say, Monday because of the holiday and stuff. So it'll probably be another week or so before we get back together.
yeah, and we're well-rounded individuals. If you want to ask Dave anything about like overall fitness training and Ironman preparation, he's your man to go to. If you want to talk to me about anything engine related or woodworking, you got the right guy. So we can handle just
It's
about
amazing
anything
how
here.
many parallels there are between that stuff and trading. So
Yeah, it's funny because you end up seeing a lot of the same, the same skill sets in people, the same kind of, brain dominance and stuff like that. We tend not to be necessarily the best artists that are out there, but we try. But hey, we got a question coming in from Rob. Doc, this is for you. Do you still do RSI Laguerre scans? Yes, I do. Yes, I do. So an RSI Laguerre is it's an interesting experiment, and I'm just going to bring up a chart here really quick.
Yeah.
While I'm here, let's take a look here. Okay, here's an example of something that I do on the side. Here's what I call a two-pane fractal, which is on the spiders, and so I've got what's called an anchor chart over here. So this is my anchor chart. This is the daily chart. And what I'm looking for is I want to trade in the direction of the anchor chart swing. Now, the anchor chart is swinging to the downside right now, but it's in the bigger context of an uptrend. So I don't want to short this right now. I don't want to take this short because this is a counter trend trade. So what I'm looking for is, as long as I stay above the 21 EMA, what I'm looking for is a certain amount of energy, which is building up quickly here. And then if it shows up, I will use what's called the RSI in Laguerre time. This is not a linear time transfer. I don't have the time to explain it, and I hardly understand it myself, but this is a very rapid oscillator. So what we're looking for is dips in price in the context of an uptrend. And I have these emailed to my inbox when they show up, and they will show up from time to time. I mean, we had a great series of signals here that just show up, and I'm just like an idiot savant. I just take the signals when they come in, and that's all there is to it. So this is, it's a smart algorithm that just trades in the background. Well, actually it doesn't trade in the background. It signals in the background, and I trade on behalf of it because there are going to be times where I will overwrite a signal, but usually not too often. But that's the RSI in Laguerre time. So this is a shared indicator. If you see the yellow line in the background here, that is our favorite CHOP index or fractal energy. And then we just have the relative strength in a much faster time frame here in Laguerre time, which is very, very useful for catching the bottoms of a powerful move. And we look to get in and we look to get out. So that's an example of what we do. Okay. So let's see, what else we got here? Is my list still about 170 stocks? No. The main watch list is, oh gosh. I don't even know how many there are in there. Just over 100, probably 120 or so, something like that. And those are the watch list I'm looking for is, it's got to be optionable. It's got to be trading, a bazillion shares per day. It's got to have weekly options, and there's more and more of them like that. But you got to be careful though that just because something has weekly options doesn't mean that you have the liquidity that you need on trades. And then around there you got to watch out for things like dividends, dividend payments,
earnings.
If you're doing earnings and dividends and stuff like that. There's all kinds of complications. So ETFs are great because I just run this particular scan on the spiders and the GLD. because they're, kind of a complement to each other. And I never have to worry about earnings. Dividends occasionally, and that's if I use a debit spread, which is typically what I'll do on these trades. So thanks for your question, Rob. And
my old school ways that'll as we shift back to a bear, probably with this drop, if it continues, we'll get back into where I look for stocks that are similar to you, right? Ton of volume, that are optional, that have a certain size EPS, certain size return on equity, all that stuff. The old FinViz screener that I like to use, and I look for those ones that are on that bottom Bollinger Band that have bled out that energy, and then sell into that, right? Sell the put side into that, and then let it run away from it, right? That's where I pretty much camped out for the last 8 to 10 years doing that stuff until we got into the bear, which was it was just easier to trade the indexes. So getting back into that type of thing again on individual stocks, probably not as much as I used to, just because I've got such a kind of a good thing going with what I have now. But there's going to be those opportunities. You have to watch it on the high flyers like the NVIDIAs and things like that, because one big news event or something can really derail those high beta stocks like that. But on others where the opportunity presents itself, it works really, really well.
So during bears, once we get a death cross on the S&P of the 50 under the 200, I'll slowly back out of the room on doing individual stocks until we clear that. And sometimes it clears really fast and we get a huge rebound from it, and sometimes it just keeps me out of the dirt for a long time. Now, if there's something that I've been assigned and I'm a firm believer in it, and you and I think alike on this, is that we'll just keep pounding on it, right? We'll just keep selling calls against it. We'll keep lowering our cost basis. You don't panic and give up on something which, like I held AMD over the bear, like big deal, right? So it's way up now. And unfortunately didn't hold NVIDIA long enough, but whatever. I got called out on that one, but that's okay. That's what you do. Well, but now I'm green light again. I'm green light.
Yeah,
so
I mean, as a pure strategy, guys, if you guys are, let's say you guys are new to options, you don't do all the spreads and the iron condors and the things that we talk about and stuff. I always like when I first got into trading, and started figuring some of this stuff out, I had come from the real estate side. I had started investing, really heavily early on in real estate. And what I liked about real estate is that I could leverage, number one, right? I can put 20% down and get, the rest of the value for it. But, you want to buy $1 for 50 cents, right? That's what you want to do. And you find a good piece of real estate, you want to get it at a below market price. And that's what helps to ensure that you can be successful with that piece of real estate, whether you're flipping it or you're even renting it. But one thing I love about the markets, if you look at like naked puts and covered calls, naked puts are your way to buy $1 at 50 cents, right? You got a stock that's at $30, you sell a $20 naked put on it. If you get put the stock, great. Right? That's like getting your place, and now you can rent it. And that's like turn around and just selling covered calls on it every single month or every couple months or whatever that is, creating that income from it. Right. And you want to do that in stocks that you want to own and stuff. But gosh, this is a great time to look at, that sort of thing. If you want to get back into, owning some good names and stuff with the run up that we had, great time to sell, those naked puts on that stock. Collect some revenue, connect some, some income. And if it comes down, then you get it at a cheaper price. You can sit there and sell calls on it. Right. And I think for where we're at, a decent correction, you get some better deals and stuff if you do that. So it's a great strategy. It does require more capital, right? But it's a really great strategy that it offers some of the kind of the safest cash flow that you can derive using options in the market. So something to think about for you guys out there if you guys haven't experimented with that.
Hey, we got a question that just came in from Ken, and I'm going to address this one, and this will be our last question for the live session for today. If you guys are watching this on a replay later on, and after today, Monday, please let us know. Reach out to us at support@12minutetrading.com and let us know if there's anything that you'd like to see us handle, I guess, 2 weeks from today when we do our next session. So I am going to go over to Ken's question. He's asking about an inverse of an individual stock. In this case, instead of NVIDIA, it's NVDS. And to me, this is what looks like, if you guys know anything about the VXX, this is very much like the VXX. Now, this is supposed to be an ETF of the VIX, and the way that this product is designed, it will go to zero. It will ultimately, because it constantly is rebalanced every day, it will go down to zero. So the same thing will happen to NVDS. What they will do is they'll do an inverse split on this. When it gets down to zero, they'll do an inverse split. And instead of having 100 shares, you'll have one share, and they'll multiply it by a number of times. And this, I have experimented with these things before in the past because it looked like, oh, this is a great idea. And they're actually terrible instruments to trade because they're designed to go to zero. If you have a bearish opinion on something like a NVIDIA, instead of trying to go short, or instead of trying to go long on a short instrument, what I would prefer that you do is find a way, learn about options, and understand how you can set up an inverse or bearish trade using options on something like that. So you can set up a limited risk trade, which in this case, like if we're going to do a vertical spread, we're going to buy a vertical spread here. We can set one up for a limited risk of $250. It looks like we just lost Dave here. So we can set up a limited risk of $250 for this trade, and it lasts until August. So if you can time the move, then you're good to go. So, all right, I am going to go back to our screen here. Yeah, it looks like I lost Dave on the webinar, but we'll be back in a couple of weeks. Ken, thanks for your question. Thanks everybody else. Oh, there's Dave. He's back. Yep. We got you back here, Dave. So I'm just gonna, I'm basically signing off here. I think we're running a little long, so we're gonna let folks go. But a couple of really good questions for today, and look forward to seeing everybody soon.
Have a great 4th of July, everybody.
All right. See you, folks. Bye now. Be good.
Bye.